Welcome in, my friends. This is the Cannabiz Conversation Season 4, powered by our great friends at Green Lane Communication. If you don't know them, by the time we're done today, you will. Green Lane Communication powers public relation program for cannabis brands. It's what they do. If you want to be heard, seen, and remembered, reach out to the team at Green Lane Communication by doing so at greenlanecommunication.com. No one does PR better in cannabis than Mikey and the team. Today is a fun guest. I have been having my eye since I started this show on Darren and what he's doing. So let's bring him in right away. Managing partner at MBO Ventures and the Cannabis ESOP Architect, as he's known. Darren Gleeman, how are you today, man?
I'm doing fantastic. I'm glad to be here.
Well, we're glad to have you. I cannot wait to jump into this with people. I want people to hear and understand and know it. As I told you in the pre-show, I'm pretty sure I do the poor man's version of it. But my reasoning, I think, will line up with the reasoning of why ESOPs are a great plan. But let's first start. We talked a little bit about pre-show and the origin story. I know you're not a big cannabis user, but when did you first find cannabis in your life there, Darren?
Oh, I guess I found cannabis. I think it must have been like 9th or 10th grade in Long Island in the 1980s, where I remember I was at my friend Jeff Sirota's house, and he had a couple of girls over the house, and from his older sister, he had a joint, and we were talking about, should we try it? And we're like, I don't know. And, of course we did. And I'll tell you, it was awesome. It was probably one of the greatest highs ever. It's the first time. And we were just the whole time just laughing and just having an amazing time. And I remember we had these deep thoughts and great conversations. So we thought anyway. And it was an awesome, phenomenal time. And that was my first experience with it. Since then, I'm a user, but every now and then.
And as is, I love that. Man, when we were younger, we thought those conversations were really cool too. So we had a little bit of a music setup with a true track recorder. We're like, yeah, let's hit that. Let's do that. Let's just have the whole night recorded. Yeah, man, those conversations aren't that cool the next morning, Darren, it turns out. They're not as interesting.
Yeah, we're not as smart as we thought we were.
That's correct. So, all right. So we have a cannabis origin story. We're into that. But obviously, you're in the cannabis business as the Cannabis ESOP Architect. Tell me, how did you get into the cannabis business, Darren?
So I used to run a hedge fund from 2001 to about 2018. Did pretty well. Back in the late 90s, we found a pattern in the stock market. And I was working for a financial firm, a real live pattern in the stock market. And so we were trading it. So we were trading about 6 stocks at a time, myself and these 2 other guys. And I had an idea. What if we can computerize that? We can then trade thousands of stocks. Went to my boss, loved it. It was a great idea. Then he went to the compliance officer, and they looked at it and said, no way, because we can actually blow up. Not only blow ourselves up, we can blow our clearing firms up. We just blow the country up. You can't do it. No computerization. So we ended up going on our own. We did pretty well with it. And what we didn't realize is that one pattern gave us a lot of data. You're into data, right, Sean? So we got a lot of data, a lot of data. And then within that data, we were able to find patterns that we would never have been able to see. So that thing just grew. So by the time I sold the company in 2018, we were trading over 1% of the entire U.S. stock market every single day. That's a lot of stocks, a lot of patterns. But there are real patterns in there. So when we sold the hedge fund, that was it. It was pretty much, I'm never allowed to trade again. Pretty much, I'm trade secreted it up. So I'm like, all right, what's my next thing? Private equity. But private equity is it's good to say, but I don't know how to go out and buy, 100 different companies. But I do know about ESOPs because a couple of years before I had acquired a firm and then I structured it inside of an ESOP. So I knew about that and I decided to get into it. I found a firm that I could work with and boom, I was straight in. And I was going to different industries and talking to a lot of people. It's a lot of work. As you know, Sean, it's when you start a business, it's nonstop, ups and downs, morning till night. You get punched in the face, and it takes a while. And then in about 2021, I'm talking to a friend of mine, and he says, we're talking about cannabis, And he says to me, I think from what you explained, I think there's a real thing here with 280E. Because bottom line, when you have an ESOP and you're 100% owned by an ESOP, you pay no income taxes. So he said to me, and it's Grant Schuster, by the way. Thank you. Shout out to Grant Schuster. Grant said, I think this works in the cannabis space, and this is a huge win. And I'm like, yes, it is a huge win. And from that day forward, I just kept pushing and pushing and pushing. And it took me a long time because no one believed me, Sean. I would talk to every single cannabis attorney, every single CPA in the industry, and no one believed me until finally, one guy, his name is Eric Berlin at Denton's, he believed me. And he's like, okay, I believe you, Darren, but I need to vet this because it sounds too good to be true. And he went out and he vetted it and spoke to tons of attorneys. And then in about 6 months, he's like, yeah, this works. And then he introduced me to some people. We got our first client. And since then, we've structured every single cannabis ESOP in the nation to date. So it's pretty cool.
It's unbelievable, to hear that. The big part that stuck out to me was the negating of 280E, right? So having done this show now for 2 years, we hear a lot about 280E. It's a big level of complaints, a big level of issue. And I understand it. Like, I don't make my living in cannabis. I've been in the background of cannabis now for 20 years. I used to be a medical grower in Colorado. Now we've been more on the bridge loan side for friends and, a couple guys get together, put up $100,000, try and help businesses like that. That's what we're doing. We're trying to be reasonable in the rates and all those things, but it's just something to help friends and move things along. But this year has been a brutal year for that. Okay, Darren, I don't have to tell you that. The debt came due and no one's got the money, right? Okay. So it makes my life in that world just a scotch tougher, It looked like a great idea for the last 7 years. And my wife, who's the investment banker of the family, she's like, look, you're the high risk guy. Go take your high risk. And up until about 6 months ago, I looked like a genius. Now I look like an asshole, which is fine. I go about my life that way. But the bigger thing for me when it comes to ESOP, can you give us the bare bones sort of, idiot's guide to the galaxy here on what is an ESOP? What does it mean to a business to do to get started? Because I believe the fear of the term, the fear of, another acronym someone doesn't understand is what blows them away. And they're like, no, I'm not interested. No, I can't do this. So tell us from the basic level, my man, what are we dealing with here?
The basic level, without any junk, an ESOP is just another way to sell your company, period, blank. That's it. It's just a way to sell your company, right? You can sell your company to private equity. You can sell your company to a strategic buyer, or you can sell your company to your employees via this thing called an ESOP. All right. Well, the employees have no money, right, Sean? They have no money. So why and how can you sell to your employees? Well, the government, this is like the government gone good, right? The government wants you to sell to your employees because they want to democratize capitalism. All right. They want to democratize it. So how do I convince you, anybody here, how do I convince you to sell to your employees? Well, money. I'm going to give you, as the government, major tax incentives, okay? Major tax subsidies. So very quickly, when you sell your company to an ESOP, you can defer your capital gains tax. That's a certain tax that whenever you sell a company, whenever you sell a stock, whenever you sell anything, you have to pay capital gains to the government. Well, if you sell your company to the employees, you can defer your capital gains. Structured correctly, you can defer it forever. That's number one. Number two, when you sell your company to your employees, if you sell 100% of the company, if you sell 100% of your company to the employees, the company itself pays zero federal income tax forever, and the company itself pays zero state income tax forever. That means that 280E is completely irrelevant. It doesn't matter if you're not paying any tax. And number three, the last piece, you can sell 100% of your company and you can still get these things called warrants, which is like a stock option. The warrants allow you to buy into your company in the future at a very low price so you can get a chunk of your company back into the future. So it incentivizes you as the company to sell today. I'm going to sell today at fair market value. I'm going to run completely tax-free. And then down the road, let's say federal legalization occurs, I can build this thing up to a huge company. Great. Now I can sell it to Budweiser and I can buy back before that sale at a very, very low price called a strike price. So those are the main tenets of the ESOP.
All right, so it's no wonder Eric Berlin had 6 months and a bunch of lawyers, because as you explain it there with your passion and energy, it all sounds too good to be true. And I'm a fucking business owner, so here I'm sitting thinking to myself, like, wait, what am I doing, right? I don't have zero of anything when it comes to taxes. You know how that goes, right? So we're paying them everywhere, and that's, again, but as I said, I do the broke man's version of that. I do it, and maybe I'm doing it wrong. Maybe I really need to look down this road, take a more established approach. The only issue with the way I've kind of organized my company, we're a people company, right? And we solve problems. We don't really have a product. I've never really seen how my company can be sold. Does that matter in these worlds? Like, if I just plan to hold my company forever, is it still a good idea to get into the ESOP world just for the tax deferment and savings alone? Does that make sense, Darren?
Yeah. Well, and to get the warrants. So you're selling it today, and you said your main product are your people, right? So when everyone goes home at night, there's no company. So that's the same issue with like accounting firms, with staffing firms, right? Same issues, and they are very big in ESOPs, because you're right. Your company right now, it's a little bit hard to sell. If I wanted to come out, I'm going to buy your company. I'm going to do the due diligence. I'm going to look at it and say, looks pretty good. But I'm thinking in my head, well, if I buy it now for 5 times your EBITDA, 5 times your net income, EBITDA is fancy net income, right? So I'm going to buy it 5 times your net income. Well, what happens if the next day, half the people leave and start their own company?
Right. And I don't want to stay, Darren. Let me be very clear. If I'm selling you my company and I'm sort of the brains behind it, I'm leaving. I've never understood the sell your company and stick around thing. It always confuses me. I'm not your guy for that. So that's what I mean. Like, it's not a business because we are the business, right? That's how it feels.
And you can absolutely sell it to an ESOP. Now, if I was buying you as a private equity, I'm not letting you leave. Because first of all, when private equity buys you, and let's just say you're making, I don't know, let's say $3 million a year net income and you're valued at $15 million. I come in as private equity. I'm not giving you $15 million. What I'm going to do is I'm going to give you $3 million. That's $3 million from my fund. Then I'm going to borrow from like JP Morgan another, let's say, 3 or 4 million off of your company, not off of mine. So that's $7 million to you. The other eight is called an earnout, Sean. That means that as long as you reach those great numbers that you told me you were going to reach, then you get paid the last $8 million. Ask your wife. That's how it works, right? That's how you can get paid your $15 million. With an ESOP, it's structured very similarly, but you don't have someone coming in giving you any equity. It's all debt. So what happens when you sell to an ESOP, right? You get the fair market value of your company. And if you're a people company like you are, there's a certain value to it. And that's the value you're going to get. But up front, what you're going to do is how you actually get paid is all through loans. It's just like private equity. So if you are making $3 million a year, we go out to that same bank, that same lender, and if we're able to borrow $5 million, private equity is able to borrow $5 million to pay you, then the company borrows the same $5 million. The rates are actually much, much better. And that $5 million goes from the company to you, the owner, of which you do not pay your capital gains tax. The other piece, remember in this example, we had a $15 million company, $5 million from the bank. The other $10 million is called a seller note. A seller note is an IOU from the company back to you, Sean. And that's how you get paid out your $15 million. So if your company is making $3 million a year and you're growing 10% a year, you'll be able to pay down that debt of that $15 million in about 5 years.
Wow, dude. It's no wonder people have to stop and really be like, what did he just say? I don't really get it.
It's a mouthful.
Because it feels complex, right? And it is. It's not like you make it simple, but it also feels and sounds complex in a way that you've known it, you understand it, you live it. What do you hear from what are the reasons people say no to you, Darren?
It's interesting. I don't usually get no. What I usually get is, that sounds too good to be true. That sounds phenomenal, because there's a lot of other benefits I just didn't get into. That sounds phenomenal. And then what happens is within like a week or 2 weeks, usually someone else might from the company, they didn't understand it because I didn't explain it to them. And then I have to go over again and again because it takes a while, because I can explain it to you in, let's say, 40 minutes, really sit down, answer your questions, and you're going to get it, Sean. You're going to be like, wow, why doesn't everybody do this? So that's your question. Why doesn't everybody do this? Right? And the answer is pretty much they forget it, and then they just kind of move on with their life, because you have to hear this over and over again to actually let it stick into your mind. What I would say is, and I tell everybody, if you can get a strategic buyer, not private equity, hands down, ESOPs beat private equity all the time because of the tax benefits, all the time. But that's because we both pay the same amount of money. So if you're a company, again, you're making $3 million a year, I don't know what it is. It's worth, again, multiple of five times three. That's your company's worth. Private equity comes in 15 million, ESOP 15 million. But if there's a strategic buyer, that means like a very large data company comes in and they want your niche and they want you now, they're not going to pay you 5 times. They're going to pay you 10 times, and they're going to pay you all cash, but they're going to pay you out over a certain amount of time and make sure that you stay for the next, let's say, 7 years. That's what strategic buyers do. And you know what? It's very hard to say no to that because the amount of money is that much bigger. And I tell people, if a strategic buyer comes in, do it. So I've had people want to do an ESOP and they're like, oh, but we have a strategic buyer coming in with all cash. And I say to them, go for it. And you know what? 100% of the time, that has never happened because the cash never is real. The cash is never, ever real.
Right. Strategic buyer. When you say that, in my world, I've got a lot of buddies who own tech firms and have sold tech firms within the automotive space. So we've been down these roads. You say strategic buyer. I say venture capitalist. Is there a difference in what I'm talking about? Is this just words or is there seriously a difference between a venture capitalist and a strategic buyer?
Yeah, it's actually different, right? There are private equity firms, venture capitalists, and strategic buyers. A private equity firm, what they do is they buy mature companies. Private equity firms will buy your type of company because it's mature and it's good and you're driving income and you have net income and I like the company and I want to either take your firm and bolt it on to another company that I have and maybe do let's say 20 companies all rolled up into one. And I want to take you, make you better, and then sell you to another private equity firm, or maybe at one point sell to a strategic buyer. Okay, that's private equity. A venture capitalist has a boatload of money, and they're going into companies that are pretty much newish, or they're about to go public at some point in time, but they're still growing rapidly. Okay, a venture capital firm never invests in a company that's making money, because if you're making money, making that income, that means there's something wrong with you. There's something wrong with you if you're making money, because if you're making money, that means that you're not spending enough on marketing. You're not spending enough on capital expenditures. You're not spending enough on your sales team. You're just losing out. You should never be making money in the venture capitalist world. You need to be growing that leaps and bounds, 100, 200, 300% a year. That's what venture capitalists do. They're not buying profitable businesses. And they also will then scale it to a point where everybody is looking for that third piece, which is the strategic buyer. That is the large company that's actually already doing business. They're mature. They're making a lot of money. Amazon is a strategic buyer. Facebook is a strategic buyer. Budweiser is a strategic buyer. 7-Eleven is a strategic buyer.
Got it. Okay. All right. Because again, so that makes sense. So it seems some of my buddies who stick around with their companies for like 5 years after they sell them are probably in a strategic buyer relationship. Is that more fair when I see them stick around?
If they're sticking around, because I need you. Well, you know what? In any firm, if it's private equity, they're sticking around too. No one is buying you ever without you sticking around, unless you are a very small piece of a larger cog, right? If I have I'm Budweiser and I buy a hard liquor, a hard cider type of company, and there's a small hard cider company in Tennessee that I want to get because I want the Tennessee state. All right. Then when I buy you, I don't need you, and I'm going to throw away all your employees. I'm going to throw away I'm going to fire all the C-suite there. I'm going to fire all the employees. All I need is that territory. So at that point, yes, the owner can walk away.
Got it.
That's a bolt-on acquisition.
Okay. So then this makes a lot of sense within the cannabis space, right? Because we have growers, we have processors, we have dispensaries, we have this, we have that. Are you seeing in the background of cannabis is what runs cannabis a lot of strategic partners and these companies that are buying in or like private equity, or are you seeing them like what are you seeing as the norm right now within the background of cannabis as you get into that?
Yeah, the problem with cannabis and the beauty of the ESOP There's no one. There's nobody buying. There's no private equity firms in the cannabis space, which is ridiculous. Because
Why?
you can go, because there's no cash, there's no money in the market from private equity firms, because most of the private equity firms aren't touching cannabis because it's federally illegal. And if they actually go and buy it, it could be money laundering. Now, not that the actual private equity firms themselves may not really care, but every private equity firm, where do they get the money from? Private equity firms are structured in a GP-LP relationship. That means that there's a general partner, you and I. Sean and Darren start a company. We're a private equity fund, Sean and Darren. So Sean and Darren are the general partners. But we have no money. We put in a little money. Let's say we put in between the two of us. We put in some money, let's say $10 million, which in the private equity world is nothing. We put $10 million. We're the general partners. Then we go out and we need to raise another, let's say $500 million. Who has $500 million laying around? Well, institutions, pension funds, okay, insurance companies, they have to invest money. So we go out and we get $100 million from the Stanford Endowment. We go out and we get $100 million from the California Teachers Union. And so what happens here are these limited partners, the Teachers Union, they're called limited partners. They don't allow us to go in and buy cannabis because it's federally illegal. They don't want to take the chance. Hence, there are very, very few private equity firms, and the sizable ones, there's no one in it. Same thing like banks. There are no there are no very large banks in there lending to the actual cash flow of a cannabis firm. So because there's no lending, private equity can't go in.
Got it. And again, we've had people on the show recently. Mark Rodriguez, a guy with the green payment world, in payroll, talking about banks. Kevin Hart talking about banks with Green Check. These guys talking about it. If you're doing things above board, it's available. But I still think a lot of people are afraid of that. When it comes to your world of the ESOP, when the light goes on for a business, what happens next? Is it quick? And I ask this because in my world, like I like an idea, right? And my team will go, hold on, you need to talk to the lawyers. And the lawyers will kill it. Okay. The lawyers kill a lot of good ideas.
That's their job.
Then that's what I pay them for. And I get all that. Do you run into a lot of lawyers killing your idea?
Oh, well, it's interesting. Sometimes you get accountants that will kill it only because they don't know what they're talking about. I mean, you have no idea the ignorance that people have. And when I say ignorance, I don't say that as a bad thing. I'm ignorant of what you do. I'm ignorant of everything. I know nothing, and I admit it. But here's the problem with an ESOP is that everyone, they think they know something. I know enough to be dangerous, and I heard this. I heard that you don't get as much money. I heard, that, all these things that people hear. Today I was talking to someone, and what did he say that he heard? I heard that when you sell your company to an ESOP, that you have you're not part of it anymore, and then the employees now make all the decisions, which is just completely not true. But people hear all of these things, and it's a big issue. And I forgot what we were talking. I forgot the question though.
Well, the question was, when the light goes on, what do they say yes to, aside from an accountant killing it? How quickly do things move, Darren, once the light goes on?
Oh, so the first thing you do is someone comes in and we go out and I need to assess, right? So our team needs to assess your company and what we think the valuation is going to be. We need to assess how much money have you guys been paying in tax? If you do the ESOP, what's going to happen to your tax? If you don't do ESOP, what are you paying in tax? If rescheduling occurs and 280E goes away, what's that going to look like in terms of your tax bill? And we go and we project out, let's say 5 years and 10 years. What's an ESOP going to look like to all of your employees? What's an ESOP going to look like in terms of you getting money? So we do that. That's the first piece. And that takes probably about 30 days to do that initial analysis. And that's really a roadway, right? It's a map to your ESOP. And then they say, yes, let's do it. The entire process takes about, I would say, you give yourself 6 months. And the reason why it's maybe 6 months into 7, but I would say 6 months, is because of the regulatory issues. In cannabis, you can't just sell your company. Now you have to be approved, like the license needs to be changed. And so there's always licensing issues whenever there's a change of ownership. So that's why you have to deal, and every single state is different. So you're dealing with that. So that's why you're dealing with lawyers, you're dealing with accountants, valuation firms, investment banking team. I mean, it's a complex thing. you're selling your company.
Yeah, it is complex. And again, as much as you do a great job of simplifying it and make me feel comfortable, I realize the complexity is much larger than that, especially when you get into permits and sub business and sub permits and, whatever. If you own the actual manufacturing part, if you don't, if you own the dispensary, so there's a lot of that. And I get that. Damn, Darren, this is a lot of information, man. This is a lot for people to digest. I understand, if I understand this correctly, you have a new book out. Is that right, Darren? Is it out?
The book is out. Here it is.
The Cannabis ESOP Architect. I love the name. I love all of it. And in this book, Darren, can folks get the roadmap? Can folks see what their future can look like? Is that what you're doing with the book? Is an education piece for others to get involved?
Absolutely. The whole idea of the book is, it does seem too good to be true. And then there's so many questions. And I go through in talking to people, I dilute it down. Now, I just went through before, I made it a little bit more complex. I went through some things I shouldn't have gone through. But, the book goes through more detail and you can then read it. And I try to write it in a way, again, to make it a little bit more easy. Here's the thing. When a private equity firm comes in to buy the company, right? No one ever looks at that complexity. Everyone just looks at, I want to sell. But by the time the process goes through, the 6 or 7 months for them to actually buy the company, you had to restructure the company. You had to do all these things. It's super complex. But with private equity, the only thing everybody thinks about is, I'm going to sell to private equity. I'm going to exit. It's going to be great. And with an ESOP, they think of, it's a complex thing. No, it's just a way to sell your company. It's complex, but everything is complex, Sean.
Everything is complex. It's not easy. I deal in data by the handful every single minute of the day, and it's about trends. It's about identification. It's about knowing what you're looking at. And once you know it, once you understand it, then it all sort of just flows, right? It's like the Matrix. You get it. But your world is deep, and these businesses are already struggling to turn profit. They're already struggling to do this, already struggling to do that, and they can't really see past their nose, if you will. And to me, ESOP is something that you have to sort of be a vision on. You have to understand the long term of it, and that's really what I love about it. So, Darren, that brings us in, man, perfectly to what we call the hot hit segment to end the show. Brought to you by Green Lane Communication. Nobody cuts the noise better than Green Lane Communication. Learn all about them, how they can help. Mikey and the team at Green Lane Communication.com. We love them for sponsoring and bringing us great people like Darren. Darren, first hot hit question for you. Is there a target business in cannabis for ESOP?
Well, the target business for us, right now we're structuring, we're focused in on cannabis. So right now the cannabis company is really what I'm focusing in on, but we structure over 30 ESOPs every single year. And that industry, they range from defense contractors to staffing, to dealerships, to medical devices, to booksellers, to landscapers, and we're doing a lot in cannabis. So it pretty much, it's the whole landscape of the one company is not good for is like artificial intelligence robotics type of companies. That's not good. The reason why are anybody that's in AI right now, there's very big premium. Okay, it's a premium to the value of your company. Meaning, remember talking about the value of your company, where your value might be 5 times your net income, right? A premium could be 20 times your net income, and so that's too much for a ESOP to pay.
Got it. So everyone is a target except for AI companies. That's what I'm hearing.
Pretty much. I mean, it really is good for everybody. The beauty of ESOPs in cannabis is everyone's been listening to me. They've been listening because of 280E. I have people's ear. So as opposed to other industries where usually in other industries, people start looking to sell the company when they're in their 60s or in their 70s, and they've been researching and looking into it. Then when I speak to them, they already kind of have somewhat of an idea. And then I explain it to them and it's like, oh, now I put everything, now I get it. But in the cannabis space, I'm talking to all types.
And so for you, so that brings me to my next question, which is ESOP as an exit strategy is something that makes a lot of sense to you in cannabis, and not only for the 280E, but just in general, probably the preferred way to exit your business. Is that how you see it?
Yeah, absolutely. It's definitely the preferred way. Again, when federal legalization occurs, and it will occur sometime down the road, if you were previous to that, if you were an ESOP, it allows you the ability to, number one, is you're selling the company today. 2025, we can sell the company and sell it at real value. So I'm really getting real value for my company, multiples, 4, 5, 6, 7, whatever the multiples are. So I'm selling it. I get these warrants for down the road so I can still get a chunk of the company, and I'm running completely tax-free. This is probably the best exit you can do right now. Now, companies always want to go public. You don't want to go public in today's environment. That was a mistake that they made in the last couple of years, and it's still a mistake. You want to build your company up and go public when federal legalization occurs and get a bump up in that multiple.
And federal legalization. So before I get to my last question, I have a sub question for you. You've been talking a lot about tax incentives, obviously here in the US. Recently, we've had some bills passed by our government. Does anything that has recently been passed affect any of the things that you've been talking about today, Darren, to your knowledge?
Nothing that's been passed is affecting us at all because nothing has been passed. I think maybe you're talking about potentially what we're all hoping for is for the 280E, which is the juggernaut of the industry, for that to go away based on something called rescheduling. I think that's
yep, that is the last question for you. Is you are a rescheduling guy? Are you a deschedule? Are you a reschedule? Where does Darren fall as a part of what makes sense for business?
So for business, as everyone knows here, 280E chokes you no expenses. You're not allowed to take any deductions. We're hoping that gets removed by rescheduling from Schedule 1 to Schedule 3, some arcane law back in the 1970s. And right now, I am a Pollyanna. I've been talking about this for a while. I think Trump is going to reschedule. If he reschedules from Schedule 1 to Schedule 3, 280E goes away and they're not choked anymore. That I want. And I think it's going to be great for the industry, great for all the people. And for me in the ESOP world, people are like, oh, well, doesn't that hurt your business? No, it doesn't hurt my business. So now, with 280E, the effective tax rate for a lot of these firms is about 60%. 280E goes away, okay, the effective tax rate is 45%. And you're still being choked by taxes. It's still huge. But what rescheduling gets me is I think it changes the mindset of a lot of these lenders. Remember I was talking about in the private equity firms, for instance, you have the limited partners and the general partners. The limited partners are the one with the money. They're the ones that are saying no. Well, if it gets rescheduled, I believe, or I'm hopeful, I'm a Pollyanna, I'm hopeful that a lot of these limited partners say, you know what? Now we can enter the space. And once these other groups enter the space, the spigots will open. Because right now, in terms of financing, there's like 4 or 5 players. And those 4 or 5 players, the interest rates are very high, and you're only talking to the very, very large companies. So once the spigots open, that'll drive those interest rates substantially lower, and we'll be able to raise a lot more debt for these companies doing ESOPs. I predict that it's not going to go from Schedule 1 to Schedule 3 for those that know it. I think Trump is going to go to Schedule 2.
Okay, so we have it on record. Darren believes we will take a step from 1 to 2. Darren, what's the difference from 1 to 2 or 1 to 3? What's the major standout to you there?
There's a big difference. Number 2 says that there's something medically there. Trump is saying there's something medically there, and if it goes to step 2, then the Section 280E does not go away. So 280E will remain. But by going to Schedule 2, it's much better than Schedule 1, but it doesn't affect the taxes. If they went to Schedule 3, it does affect the taxes. So we're all hopeful it goes to Schedule 3. But in Trump's comments that he made, he said, I believe there's medical reasons to do this, but I don't think this should be for adult use. He basically said that. So I think he might then try to make the deal in between.
Well, yeah, and I'm not going to get too sidetracked, but that's because that aligns with the base, right? Like, you can't talk about adult use because then you got a whole problem with all the crazy religious folks. So that's where that shit breaks down. So I understand that, and I respect that. That is more than I thought we would mention that name on this show, but here we are because that's the time we live in. I understand that as well. Darren, let's ask this on the way out. Last question for you. How can folks find you to talk about the ESOP plan, man? Where do we go to find Darren and get a hold of him and get this story going?
The best thing, right? You can go to my website and you can just go fill out the form there, or just go to LinkedIn. Go to LinkedIn, you see my name, Darren Gleeman, right there on LinkedIn, and then message me and I will answer. It's not like I'm getting a billion messages every day, except for all those crazy messages. Ooh, Darren, how would you like to learn about X, Y, and Z? I get a lot of those, but I'm still looking at all my messages.
Darren, for that end, just real quickly, what is the website for folks, man?
www.mboventures.com. You can see on my name, MBO. So MBO Ventures, VENTURES.com.
Great, man. Thank you so much for your time. You've been absolutely wonderful. Your education to folks is straight up and down. It makes a lot of sense. Folks, go out and get the book, man. The guy is the Cannabis ESOP Architect. You want to know more. You want to learn more. Hell, I want to know more. I want to learn more. So, Darren, I might be one of those guys creeping up in the inbox on you, man, because I'm definitely trying to learn and understand more about the future of my company. It's been around 13 years. I want it to be around another 15, and then I want to be good. And I want to be done with the whole thing at max. You know what I mean? So you'll be hearing from me. But thanks a lot for your time, Darren. You've been great.
All right. Thanks, Sean. Appreciate it.
Thank you to Green Lane Communication for the sponsorship. We thank you. We appreciate you. If you're a business in cannabis, you want to stand out, you want to be heard, you want to cut through the noise, head over to greenlanecommunication.com to go and get started today. Or find Mikey Meyer all over LinkedIn. The guy is a PR genius and a good human being on top of that. Darren, thank you so much. Folks, thank you for joining us. We will see you again next week. Have a great week. And remember, our goal here always, remove the stigma, uplift the plant. Thank you so much.
Thank you.